I know I have a real strong likelihood it's going to at least take this out and maybe run below here going into that 1 o'clock news release. Well, here's the 1 o'clock, and then the market drops. Here, what I was looking at is I want to see, does it do this? Does it run up into this fair value gap there? That's this here. There's your fair value gap. And what is it doing there? Does it at least touch the consequent encroachment or midpoint of that gap? Look closely. No, it doesn't. It gets real close to it, but it doesn't. Let me see if I can make it a little bit bigger. See? Just falls short of it. The fact that it goes up there and doesn't touch it and then closes here, I know that that right there is a bearish order block. I can trade after the next candles come up and bump in the bottom of it. I'll trade short there. All it has to do is move away from it and then come back up into that. I can trust this candle not being overtaken. What's the next candle do? Goes up to it, but doesn't touch this line, and it doesn't even breach the candle's high. Now, if it would have traded up and touched that midpoint and then did that, I would not have taken that trade. I would have waited for another attempt to get in there and work just a little bit above the consequent encroachment, and then I would try to go short in this upper part there. That's what I would have done differently. But because it didn't and couldn't even touch the consequent encroachment, these are PD arrays. And yes, they're used for very specific and static levels to enter and exit on. But I also use these same price points as a means of measuring strength and weakness. If this candlestick can't even touch that, but gets close to it, it's signaling. It's a signature. That's an algorithmic signature. For someone that knows what they're looking for, that tells me that when this candle closes, all I need to do is see it move away and come back up and touch the bottom of that, and that's a bearish order block. Yes.